How the ultra-rich get rich and avoid taxes legally. An ESOP is an employee stock ownership plan where you sell between 33 and 49%. Mind you, this is a minority stake in your business, and a bank will finance your employees, backstopping that debt with the equity that you sell them. Then the bank gives them the loan to pay you for the stock you gave them. It's kind of how it works. You can help your employees get wealthy, you get a tax-free check, you just traded the equity and you get cash for what you gave the employees, but you still own the asset. And so the asset is still worth what it is in the private realm. So if you add those two things together, you still have $1 billion, but you get the liquidity and you keep the control.
This is true. ESOPs are great. They are a great way to get stock and ownership and equity to your employees and also get a buyout. Maybe not, you can do it for the whole thing, but then you give up all the equity and the control of your company. But even if you sell a minor piece, the portion that is owned by the ESOP is actually tax-free. And so you take, what happens is you sell the company or a portion of it to your employees, the bank gives you the loan, and then you use the tax savings, because that portion is tax-free, to pay off the loan. So the money that you would have paid in taxes, you just pay down the principal and the interest on the loan. Now with ESOPs, you've got to be at a business size doing about at least $10 million in revenue before the bank's really going to take you seriously and give you the loan for that equity, because they want it to be a fully legitimate business. Just like private equity firms don't really look at you until you're at about $10 million in revenue. So that's kind of the threshold when you want to start thinking about this, but it's a great option to consider to get some wealth to your employees and tax-free money to yourself.